Do you legally need to provide your employees medical insurance in Malaysia? The straight answer is no. The Employment Act doesn't require it. SOCSO is mandatory, private medical insurance isn't. But stopping there is highly misleading because SOCSO covers far less than what most business owners assume. And that exact blind spot gets small operations into massive financial trouble. Let me show you what SOCSO actually covers and where it completely leaves your staff exposed. Let's look at the fact. SOCSO is strictly a social safety net. It only covers your team for workplace injuries, occupational diseases, or accidents that happen while they are actively commuting to or from work. That is it. What it does not cover is a normal everyday illness admission. If your senior graphic designer gets acute appendicitis on a Saturday night, or your sales manager needs emergency surgery, SOCSO pays zero. It doesn't cover their family members, and it doesn't cover anything off the clock. Saying we already pay SOCSO is not the same as staff medical coverage. When a loyal employee faces a 30,000 ringgit medical bill, they will look at you for help. And you are stuck between a terrible financial decision and a heartbreaking human one. So why do most SMEs choose to provide it anyway? A basic group employee benefit package operates under one master policy and usually covers three things: group hospitalization and surgical for normal illnesses, group term life for death or disability, and group personal accident for round-the-clock protection. The beauty of doing this as a company is the scale. For small teams, you often get no individual medical underwriting, meaning your employees join the plan without filling out health questionnaires or being rejected for pre-existing conditions. And because the risk is spread, the group rates are significantly cheaper per head than individual policies. Now, a lot of business owners tell me, Keith, why don't I just give them a few hundred ringgit extra a month as medical allowance? It's cleaner. It's logical, but in real life, it backfires completely. When you hand over cash as salary top-up, human nature takes over. That money gets spent on groceries, petrol, or utility bills. It does not go into an insurance policy. A year down the road, when a real medical emergency hits, that employee won't have the cash. They will still walk into your office, stressed, asking for a company loan or a salary advance. You end up paying out of your pocket anyway to help them, meaning you have paid the cash allowance and you are taking on the medical bill. You end up paying far more than the group premium would have cost. So what does this actually cost? For a small team of 5 to 20 people in Malaysia, a solid foundational group medical plan ranges anywhere from 1,000 to 1,800 ringgit per employee every year. Break that down monthly and you're looking at roughly 80 to 100 ringgit per head. Contrast that against the cost of doing nothing. If your competitors offer medical benefits and you don't, you risk losing your best people. Replacing a key staff member easily costs 3 to 6 months of their salary in downtime and retraining. The math clearly favors protecting your team. You don't have to roll out a gold tier package on day one. If cash flow is tight, you can start small. Even a basic accident or entry-level hospitalization plan shows your team you care about their well-being. If you want to see what a structured plan looks like for your exact team size, head over to the link in the description below for free policy and comparison template. Or if you want to skip the guesswork, click my WhatsApp link below for a no-obligation employee benefit review. Let's protect your cash flow while keeping your best people safe. I'll see you in the next video.